an effective method in trading stocks. I am going to give a brief explanation of the stock trading method that I use. This method is based around examining SEC Form 4 and applying a healthy dose of cynicism and paranoia. If you are not aware of what the SEC Form 4 is, it can be summarized as a record of insider transactions that must be filed with the Securities and Exchange Commission. When a corporate insider, such as an officer, purchases or sells stock, they are required to submit this form. It is a very useful tool in examining the level of optimism held by senior staff in the company. Finding SEC Form 4 filings is actually fairly easy, and you have a couple of options. The most difficult is to actually get them from the SEC website, but because the SEC distributes the filings over the internet, there are a number of other websites that organize them into user-friendly databases. Choosing a website that you are comfortable with may take a little time, but a web search should bring up plenty of options. When looking at the insider transaction, there are a couple things to think about when deciding if it is valid to your stock trading plan. First, find the position in the company of the insider making the purchase. Officers and employees, in my experience, seem to have a much better view of the operation of the company than directors and 10% owners. There are issues that may distort the views of the insider. These can include a personal bias towards the success of the company. This may be evident in companies where the CEO is also the inventor of the product. Often you will see that an insider will be CEO, 10% owner, and chairman of the board. This consolidation of power within the company, in my opinion, generally has negative effects. I have found that directors and 10% owners are poor indicators for the actual performance of a company. However, even if the company is unproductive, the stock price may rise due to insiders, usually directors and 10% owners, purchasing stock in order to gain more control. Though that potential conflict between insiders will increase stock price if the actual productivity of the company does not improve under whoever gains control, then the stock value will again decrease. What do I like to see? I like to see a series of filings that show multiple insiders buying large amounts of shares. Just because one insider is buying doesn't necessarily mean that the stock is good. That insider quite possibly could be making a mistake or reckless. It happens occasionally if the CEO, the CFO, vice presidents, and directors are all buying in amounts that are more than trivial for their likely income, then there is a good chance that there is a reason to be optimistic about the company. There are some problems that insiders try to solve by purchasing stock. A common one is delisting when the stock price goes below $1. Insiders know that people watch insider transactions and think that just because they buy their stock, that it will encourage other investors to buy as well. That is why it is important to decide if the purchase is trivial. Another thing to be aware of is that there is a big difference between an insider purchase and an insider acquisition. An acquisition is often a bonus to the insider instead of cash, and excessive acquisitions in this manner will lower stock value to investors. After selecting a stock to purchase, it may be a good time to review your portfolio strategy. As a small investor, I often invest only about $1,000 into a stock, and I recommend that you try to at least have 2 stocks in case one stock is a poor choice. Also, due to economy of scale, I find it ineffective to invest less than $500 because of commission fees. I think it is a very good idea to minimize my personal greed as an influence, so I have selected a standard rate of return at 10%, and immediately after a purchase has fully cleared, I set up a limit sale with a 10% increase. Often this is met within a month. If not, it may take a couple months for the company to actually demonstrate success. That is why I limit the amount of money being put into a stock. Losses happen if, as a small investor, you have an adequate savings plan, such as adding $50 or $100 to your brokerage account. Every paycheck you can absorb losses, and as confidence builds with successful transactions, you may just see them as mistakes to be learned from instead of financial stressors. I should also mention my policy for purchase price. You will notice that stock price may increase because of or immediately after an insider has purchased. My goal is to always pay no more than 1% more than what the insider paid. This may take a little patience, but can't prevent you from having to wait even longer for your target sale price. Even if you are afraid to invest successfully, being able to save money every paycheck, no matter how little, can save you from serious financial hardship. I do not expect anyone to accept this method at face value. I encourage you to practice with paper trading, especially if you're a new investor. Paper trading is something you can do to spend time and encourage yourself to save for investing.